The Personal Finance Executive Summary, January 22nd, 2014. Welcome to Personal Finance. Market Watch. The beginning of the year is a time of superstition. Old investing legend says that the first 5 days of January determine the whole year. Does this bode ill for the stock market in 2014? The basic conclusion is that there is some correlation between how the year starts and how it ends. From 1927 through 2012, the S&P 500 made its annual high on the year's final trading day 11 times. In 10 instances, the index finished the following year higher. There also seems to be mild correlations with other theories, such as the Super Bowl. Superstitious investors say that you should root for the national conference team come February 2nd. But there are no guarantees. Just look at 2008, when the New York Giants, from the National Conference, won the Super Bowl and the stock market suffered its financial crisis downturn. Despite the early year weakness, 2014 is starting off in much the same way 2013 ended. Signs of faster economic growth, as well as concerns about rising interest rates in the US. And now, the case for income supported by growth. Income-seeking investors should continue to diversify by including in their portfolios the dividend-paying stocks of high-quality electric and water utilities, telecoms, foreign companies, master limited partnerships, MLPs, and real estate investment trusts, REITs. The Personal Finance portfolio has a number of choice picks, including Plains All-American Pipeline LP. Plains All-American Pipeline LP is a buy up to $50. Our focus is on the long term, with an emphasis on stocks with business models that support dividend growth as opposed to those that carry high yields. We particularly like large companies with geographic diversity, notably AES Corp., which, in addition to its regulated U.S. operations, has extensive exposure to high-growth markets in Africa, Europe, and Latin America. AES Corp. is a buy up to $17. And now for our feature article, 3 stocks with vertical lift.
As economic recovery accelerates in 2014, a certain industry that many investors don't think much about, the helicopter industry, is poised to soar. That's because helicopters aren't just interesting flying contraptions. They're indispensable productivity-enhancing tools in a whole host of industries, whether it's law enforcement, offshore oil rig transportation, emergency medical services, utility repair. The unique capabilities of rotorcraft are much coveted by many industries. And we look at the 3 leading industry stocks. We look at the Bristow Group, which is the biggest helicopter operator in the offshore oil and gas rig sector. We look at Air Methods, which is the gold standard in emergency medical services, and Sikorsky Aircraft, a wholly owned subsidiary of United Technologies. Now, United Technologies is a sprawling conglomerate with many divisions, and Sikorsky is only one division, but it's a major division. Sikorsky generated over $7 billion in revenue last year, and Sikorsky is the globe's largest maker of the helicopter airframes themselves. And operators like Air Methods and Bristow will increasingly turn to Sikorsky for the helicopters they need. Why do we think Air Methods and Bristow will take off in 2014? Well, first of all, as Obamacare is increasingly implemented this year, roughly 32 million Americans will suddenly have expanded health care insurance, and that insurance will cover things like EMS. That means Air Methods, the leading provider of emergency medical services, is poised to reap the lion's share of all that extra revenue. Air Methods has been in acquisition mode. It's bought a lot of other helicopter operators that complement its existing services, and it's been able to reap economies of scale from all of those acquisitions. The helicopter operating business is notoriously high in overhead. Air Methods has gotten over that hurdle by buying weak competitors, quickly absorbing them. streamlining their operations, and then achieving economies of scale. Bristow Group is the largest provider of transportation for the offshore oil and gas industry, and we feel that the energy patch will continue to experience the boom that it's enjoyed the last couple of years, and that's especially true for deep water drilling. And as more and more of the major oil companies go ever deeper and ever farther out to the ocean to look for new sources of energy, Bristow will be needed to get those workers out to the oil rigs and back faster and safer. So Bristow has been racking up more and more clients as deep water drilling expands and as offshore exploration and drilling expands in general. Air Methods stands to reap a huge new revenue from Obamacare's expansion of healthcare insurance. And Sikorsky will make plenty of profit in 2014 and beyond, making helicopters and selling them to companies like Air Methods and Bristow. So these are three companies that are also reasonably valued, especially Bristow, which boasts a very low 12-month trailing price-to-earnings ratio of only about 16, which compares favorably to its peers. They're all reasonably valued. Companies that usually aren't on the radar screen of most investors, and we think that they're good plays on economic recovery now.
Now that we're halfway through January, many investors are planning their financial year. So as you comb through your bank accounts, don't forget that tomorrow's prices will inevitably be higher. It's one thing to read about inflation on a national scale, but a very different thing to keep up with the unavoidable rise of day-to-day costs. Coffee, cars, and clothes will all be 10% more by the end of 2014. Here at Investing Daily, we've created a cost of living calculator to help you determine the actual buying power of your money over the next few years. The answers may surprise you. Please click the link next to this video to find out more. Thank you so much for watching, and join us next time for the executive summary of personal finance.